Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Each year in June, the reconstitution of the Russell indexes takes place in what's known as the Russell Reconstitution. On June 28, 2024, about $11 trillion in investor assets will be rebalanced. Last year, nearly 2.5 billion shares and $62 billion were traded at the close of the Russell Reconstitution, executed in the closing cross in just under 1 second across Nasdaq-listed securities. After markets close on Friday, June 28th, the changes become final and the updated indexes begin running Monday, July 1st, when markets open. For the 21st consecutive year, the Nasdaq closing cross will be used to rebalance Nasdaq-listed securities in the entire family of Russell U.S. indexes. The rebalance is designed to ensure that the Russell U.S. indexes continue to accurately reflect the ever-changing state of the U.S. equity market and its segments. Joining me at the Nasdaq market site to discuss the importance of the Russell Reconstitution to the market and investors are Giang, Vice President and Head of U.S. Equities and ETPs at Nasdaq, Catherine Yoshimoto, Director of Product Management at FTSE Russell, Bill Coleman, Head of U.S. ETF Capital Markets and Vanguard, and Josh Khalif, Institutional Trader at Flow Traders. It is great to have everyone back with us for our annual Russell Reconstitution panel. And Catherine, let's kick it off with you. Why is the Reconstitution so important for U.S. markets and investors?
Well, you already summarized it very well. $10.5 trillion of investor assets are benchmarked to a Russell index, the Russell 1000, 2000 growth and value index segments, and the markets are constantly changing. So it's really important that the indexes are rebalanced on a regular basis so that they accurately reflect the markets.
Right. And Bill, as an ETF issuer, how does Vanguard view the upcoming Russell Reconstitution in relation to the ETFs that you track?
Yeah, so reconstitutions, they're a big deal for us. We have 7 ETFs benchmarked to Russell and about $100 billion in total if you include mutual fund assets. As you can imagine, these index reconstitutions are all hands on deck. Not many people get a day off during this week. Starts weeks in advance, so we really appreciate the transparent nature of the Russell benchmarks. But we start weeks in advance to really start preparing for what this rebalance is going to look like, looking at what the total turnover will be, what the adds and deletes will be from the 1,000, 2,000, what's migrating 1,000, 2,000, what's going from growth to value, really getting a good idea of what we'll need to trade and what that means for our portfolios. And we start running lists well ahead of time just to look at what it's going to take in order to trade this reconstitution. And this year, it's looking to be about $15 billion for Vanguard that we're going to have to trade all on Friday.
Yeah, I mean, 0.86 seconds, Giang. So from Nasdaq's perspective, why is the Russell Reconstitution such a big deal for markets and investors?
Yeah, I mean, as Catherine and Bill both said, it's a big trading day, especially at the close. It's really a significant, it's one of the biggest trading day of the year. And, for Nasdaq, we're a trading venue, a listing venue. There's hundreds of companies that are going to be added to the Russell benchmarks. Nasdaq's a listed venue for many of those, and being added to a benchmark like the Russell with 10.5 trillion benchmark to it, including the Vanguard ETFs, it drives natural demand into your stocks. It helps create liquidity in the stocks, help investors be able to find liquidity and transparency in trading, larger size. It also helps company raise more capital as well.
Right. So Josh, as a market maker trading the Vanguard ETFs during the Russell rebalance, how do you prepare for increased trading activity that typically accompanies this event? I'm still trying to wrap my head around the fact this happens in less than a second.
Yeah, so internally, we're of course a principal trading firm, and we commit capital and use our own balance sheet when trading for investors. So we need to make sure that that capital is allocated appropriately. We have trading desks in the US, in Europe, and in Asia. So we work in the days and weeks leading up to the Russell rebalance to make sure we have the appropriate capital so we can provide liquidity. Obviously, the Russell rebalance is US focused, so we spend a lot of time working with our team to make sure we're properly capitalized, can provide liquidity in all the ETFs tracking these indices. And then externally, we're spending a lot of time working with clients in the days and weeks leading up to this rebalance. It's obviously differing mandates from different clients, different trading philosophies. So we work very closely with them in a consultative nature to make sure we can best assist them when this trade needs to happen.
So Catherine, what are some of the major changes that are happening to the indexes this year?
Largely, it's a story of more growth happening in the markets in general. The markets, the size of the Russell 3000 is up 20% compared to last year's rebalance to $53 trillion. Now, you see more of the bigger growth happening at the top end of the market cap. So the Magnificent Seven stocks, the largest 10 companies in the Russell indexes, they've grown more than 40% compared to last year. Now the breakpoint between the Russell 1000 and Russell 2000 has increased 9.5% from 4.2 billion last year to 4.6 billion. So it is a large story of growth, a lot of technology fueled growth. Super Micro Computer, MicroStrategy are two notable companies moving up from the Russell 2000 into the Russell 1000. The growth weight is increasing in the Russell 1000, but also healthcare companies are replenishing the Russell 2000 index.
Yeah, so Bill, what key considerations does Vanguard take into account when adjusting the composition of these ETFs to align with the changes that take place in the Russell indexes?
Yeah, so it's not just about what we have to trade at Vanguard. We look at what the total trade is across everyone that's going to be managing their assets against a Russell index on the Rebounds day, or Recon day. And what we've seen this year, it's going to be about $70 billion aside, or $150 billion total traded this week. So we take a look at that. We look at where all the assets managed to Russell, what we believe that they're going to be trading, where flows are going to be on Friday, based on assets managed to the 1, the 2, and the growth and value styles. And we look at, well, what's our trade relative to that? So if we look at an individual name that looks like it's a net buy, some major flow happening on Friday, but we're a net seller, that's good information for us to have. Same way if we're also a net buyer internally to Vanguard. That informs our trading strategy so that we know how to execute on that day. And it really when it comes to implementing our trading strategy, this is where the art comes in, like the science is all putting it together. It's all math to figure out where the flows are. But the art comes in when we are balancing trading impact with tracking error. As an index fund manager, we can perfectly track our benchmark if we just put everything onto the close or trade it into the close. However, if we're a huge buyer and everyone else is, you can see us have impact, push that price up. If we're a huge seller and everyone else sells, you can see it push down. You're tracking well, but overall we believe that hurts investors' returns in these products. So we like to take a really thoughtful approach to rebalancing any of our portfolios with the goal of achieving best investment outcomes for our investors.
Giang, what's significant about the Nasdaq closing cross? Try and put that into context for us.
Yeah, I mean, as Bill mentioned, when the index rebalances, the fund that is tracking it needs to trade in order to really minimize the tracking errors while having the best investor experience possible. So that's really why there's such an importance in the closing cross, because the closing cross produces the benchmark closing price and allows you to minimize that tracking error. So having a resilient and a deterministic closing cross really makes a big difference here. And the Nasdaq closing cross really prioritizes minimizing volatility and minimizing the imbalance, so really giving you more price stability going into the close. So as you mentioned in the beginning, we executed 2.5 billion shares last year in less than a second. Those are things that we really have invested into our capacity, our technology, and our resiliency when it comes to the closing cross.
Well, Catherine, are there any concerns with the Russell rebalance? Because it typically is the largest volume day of the year, especially around the market close. Bill had mentioned that before.
I personally don't have concerns. As Giang mentioned, there's this process around the close to make it a seamless and orderly reconstitution process. Actually, Russell indexes were the first to partner with Nasdaq for a reconstitution rebalance using the closing cross mechanism. So that's just one example of how we work with market participants to make sure this is an orderly process. But in addition, the transparency, the advance notice we give to the markets well in advance of the reconstitution day really provides more stability coming into the close.
Right. So Giang, back to you for a moment here. Nasdaq listed ETFs, it will allow for price discovery with the Nasdaq closing cross.
Yeah, I mean, Nasdaq listed ETFs also are supported by the robustness of the Nasdaq closing cross. So even though the ETF itself is not going to have significant trading in the close as a result of the rebalance, but we definitely, because they're derivatively priced, we have certain mechanism and protections that really ensure that the ETF is trading as close to its intrinsic value as possible at the close. So we provide market maker incentives, like working with Josh's firm to ensure that they're supporting the auction. There's mechanisms around tighter collars for ETFs that are listed on Nasdaq, as well as certain, if there are for thinly traded ETFs that might not have a closing auction, we have an enhanced closing closing price mechanism to ensure that that price is really reflective of the ETF's fair value.
Right, so Josh, let's cover a couple things here. Walk us through some of the challenges and opportunities that you encounter as a market maker during the rebalance process.
Yeah, so as everyone mentioned, there's obviously heightened volumes during this day. And because of that, the Russell rebalance is just a massive liquidity event. You might get a small cap stock that trades tens of thousands of shares on a normal trading day. And then as we get closer to the Russell Recon Day, and actually on the Russell Recon Day, you might be trading hundreds of thousands, if not millions of shares. So not only do you have people that are trading and rebalancing to keep in line with the index and manage around the index changes, but you have also people looking to capitalize on the heightened liquidity. So as a market maker, there's obviously different incentives that we need to be cognizant of and that we all need to take into account when we're making markets in various ETFs and being aware of this trade taking place.
Right, so as a Nasdaq designated liquidity provider, you do contribute to maintaining liquidity and price efficiency for investors.
That's exactly right, and that's kind of our mandate, and our job is, efficient, liquid markets, irrespective of what's going on, whether it's a global macro event, like COVID-19, a Brexit, an FOMC decision, whether it's a global macro event or something related to like a rebalance. Our job is to provide good competitive liquidity during all market hours, and especially around the close where we see a heightened volume.
And Bill, to wrap up here, how does Vanguard's capital markets team support investors during increased trading around the Russell rebel?
Yeah, for this question, I'd like to start with my team's mission, and that is to ensure that investors have a great experience and achieve the lowest possible trading costs when buying and selling ETFs. So one of the ways we do this is that we maintain strong, deep relationships with exchanges and with market makers, because they play a critical role in this whole thing. Market makers especially, they are there, we think of them as the matchmakers between buyers and sellers. Seldom do you see a buyer and seller come into the market and transact with each other. But market maker is there doing that all day long, every day. And they play a critical role every day, especially for ETFs and making sure that there's deep and liquid markets. So on a rebalance, there's a lot happening. We talked about the volumes that are happening. We talked about the turnover, all the trading that is happening. And with that comes a little bit of risk, or a lot of risk. It's $140 billion we're talking about. So when it comes to that, we want to make sure that we're the experts in our baskets are accurate. My team is the front line. If there's any market participant that has any questions on what's in our basket, what's it holding, how is it trading. So we have those conversations and we make sure that everything is flowing and smooth.
Well, actually, one more question for you. As a retail investor, is there anything I have to do with my ETF? Does it impact the average investor at all?
No, it doesn't. It works that well. Between the exchanges and the market makers and the capital markets desks, ETFs trade the same way on a recon day as they do every other day. It works really, really well.
All right, appreciate everyone's insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.